When it comes to 401ks, it's a little tricky because there's not a one size fits all, right? Every company has different plans, and some have safe harbor, some have other options. And the idea is, all right, well, how much money is the company matching that I put into this, obviously, planning tool, pre-tax? Or some people say, all right, let's do a Roth 401k. I think those are the big issues to tackle first is, get your hands around how much is my company matching? Because that should be part of, your decision of your compensation package. It could be a big deal. Some people pay, some match every dollar. Some match, up to 5% of your salary. There's some pretty big gains that can happen. And that's instant return, right? If someone's matching your money's doubling the second you put it in, or at least a percentage of it. So that's pretty exciting. And then from there, you're asking yourself, do you want it to go in pre-tax or post-tax? There's no perfect line of demarcation of when you choose this. But obviously, the longer that money is going to sit in there, i.e., if you're younger, putting in Roth 401k contributions after tax could make a lot of sense because it grows tax-free forever. And that's a huge deal, particularly if you got 20, 30, 40 years until you actually need the money. You're going to get a lot of growth afterwards. I know it kind of stinks paying tax on it, but at the end of the day, I think everyone's aligned. It doesn't matter if you're a Republican or a Democrat. I think everyone's going to say, we think taxes probably aren't going to get much lower. At the end of the day, they're probably going to go up. And if they go up, you lose. If you pay tax now with them, obviously, as they are, you win. And I think that's how a lot of people are thinking about their 401ks when it comes to tax issues. As you get later in life, you're in that last couple of years. If you're not getting a great match, you have to start to ask yourself, do I want my money to be put into a vehicle that I can't access? Maybe you're thinking about retiring a little earlier, around, 50 or 55. There could be rules about you obviously not be able to access your money till you're 59 and a half. Is that the kind of, do you need the money? Are you planning on spending it? There's a lot of, questions that need to be asked if you're going to be, contributing to your 401k plan later in life. But, the biggest thing that we see and the biggest thing that we help with is once you get to that, finish line, Randy, and you're at the, the retirement, pinnacle on top of the mountain, looking down, about to work your way down retirement mountain. You've hung up the work boots and the lunch pail on the hard hat. You say to yourself, all right, what do I do with this 401k thing now? it's got $1 million in it. What do I do, Greg? I can't, do I take it out? What? And then, they've been hearing from their financial advisor or their accountant, why would you pay taxes if you don't have to? You can wait till 73. So a lot of people are in the mindset. They're like, I'm just going to ride this one out, Randy. I'm going to wait till 73 before I touch this money. And, my first reaction is the practical one, like, wow, you're going to wait 13 years, probably the most active years of your retirement before you spend your largest financial asset. That feels pretty lame, right? Like that doesn't feel very fun. That isn't what you dreamed of retirement. You didn't dream of retirement to wait to access your 401k. And people are like, well, yeah, I guess sort of, okay. But at the end of the day, people have to realize that 401k that gets rolled over to an IRA when you retire is getting taxed no matter what. It's just a question of when and how much. It's going to be income tax, not capital gains tax, income tax. And you just have to figure out, how am I going to get this money out the most cost effectively, the most tax proficient way to ensure that you aren't giving Uncle Sam too much. I think that's really what most people don't want to do. They don't want to give Uncle Sam too much, Randy. And when we start to lay this out, we call it our tax map. Our team of CPAs build out when and how much to take out of your, obviously, IRA over the course of your retirement each year to either convert it to a Roth or just take it out, detax it, and put it, obviously, in an after-tax account so you can spend it. And the idea is, heck, yes, we want to start taxing that thing right away. You're retired. You're in a lower income tax bracket. You may not have turned on Social Security yet. You may have. Either way, it doesn't matter. We want to get that money out because the second one of you pass, when a spouse passes, all of a sudden your tax rate could double. We call it the widow's penalty because you go from a couple filing rate, income tax rate, to a single filing tax rate, which could be a big jump. You can go from, on that $1 million IRA, you can end up going from 10% to 20%, meaning you can end up paying $200,000 instead of $100,000 of that IRA over the course of your retirement. Or even worse, when the survivor passes away, it goes to your kids, then you're going to pay at your kids' tax rates, which we call the kiddos penalty, which ends up being another, they could be in their highest earning tax rates. You could be as close to 40%. So that $1 million IRA, Randy, could have ended up going $400,000 to Uncle Sam. Or you have a plan that's built for you that you take out over your lifetime, and you actually get to enjoy the money you saved in your retirement in the early years. That is why we run our tax map. That's why we execute our tax map. We update it every year. Our team of CPAs on staff do it. It's that important. And it's the difference between spending $100,000 and $400,000 on taxes on $1 million IRA, Randy. I mean, it is one of the biggest savings that gets overlooked. It drives me absolutely crazy that the financial industry continues to overlook this. Everyone should be digging in. If your financial advisor hasn't brought it up or doesn't want to bring it up or keeps talking about waiting until 73, give us a call. We'll be happy to do one for no cost. We build a tax map for every complimentary roadmap we build for people that call in that want a second opinion of what's going on under their hood, particularly when it comes to taxes.